Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host, and it is 9 o'clock on Friday, March 27th. And we're looking at a chart of the S&P 500. It's still kind of traveling back and forth in this little range that we show here, this range bounded by this trend line and then this orange upper trend line here. We've got these longer trend line. This blue one is a longer trend line. It's like 20 years long. But I drew these orange ones on here just to illustrate the shorter term action that's happening right in this area. So we had a down week, which means we did not make a higher high. So if you look at it here, I've got it kind of highlighted here in yellow. There's a high here. Okay, and then let's start back here. There was the market pulled back to this high, this low here is actually just slightly higher than that low there, and then we pulled up to a new high, and we pulled back to a higher low. So this low is now higher than this low, and then we were looking for this box to provide some resistance and make new highs. But as you can see, the market pulled to a lower high, okay, slightly lower than the high back here. And then we had a pretty big, this is almost a bearish engulfing pattern, not quite a bearish engulfing pattern. Of course, it would have to confirm next week and look something like that to actually be a bearish engulfing pattern. But a real bearish engulfing pattern would completely encompass, the body would completely encompass the previous open and close from the previous week. And then to confirm the bearish engulfing pattern, you would have to have a close below this area right here, right in there. So you'd have a close below that. So it's almost a bearish engulfing pattern, and the name of the pattern is not so important as what it represents. Probably heard me say this before. Everything that you really need to know about the buying and selling that's going on in the market is represented graphically here on the chart. So we use the chart to describe what is happening in the market. So we didn't make a higher high, and we don't have a lower low yet. So I suspect next week, it could just be kind of a pattern that's like so. It could have done this, and then this. Okay, it could do that, and or it could continue down a little bit until we make a lower low, and then bounce. And this bounce would be critical to see how high it goes. If it's a weak bounce again, it's probably a good time to put some money on the sidelines, because then you would have a lower low and a lower high from this. So your downtrend, you'd have a downtrend here, and then you'd have a downtrend here. And then what tends to happen is you first start off in these channels, and then what happens is you end up breaking out of the channel, and the market accelerates out of the channel. And of course, you don't really want to be in the market during this. Now, some of you may say, well, I want more evidence, and that's fine. There's nothing wrong with that. But once the trend starts to change directions, the reality is that's all the evidence you need. Now, there's some interesting things that have come out this week. I don't have any graphs to illustrate it, so I apologize for that. But mutual fund cash is at its lowest since 2007. It's actually below 4%, and it was, just to kind of give you an idea, in 2007 it was 4%, or maybe a little bit below, and in the year 2000 it was 4%. So kind of what happens when mutual fund cash gets to 4%, that means pretty much everybody's all in. And usually when everybody's all in, that's when the market likes to do a little switcheroo on everybody and take some money. So just be careful here. We do have a lower high. We haven't made a lower low yet, but that could be in the making here in the next week or maybe two. So be on your toes and have a plan. Hopefully you've decided already what you might want to do to preserve your capital. I don't know if y'all are familiar with like Warren Buffett's rule number one. Rule number one is don't lose money. Rule number two is don't forget rule number one. So rule number one is pretty important. Let's look at the interest rate market. That's an important market. We've been talking about that. If I can get the chart to come up here. Let me do it this way. There we go. So we've been looking at this little trend line here. Let me zoom in on all this right here. So we've got this low here. We're calling this potentially an important low. Market ran up, pulled back, and we've got this trend line here we've been watching. It shot out pretty good here. The Fed this past week took the word patient out of their statement. And everybody's talking about what does that mean, taking the word patient out? Well, who knows what it means? I mean, I know what it means. I know what the word patience means, but I guess they're kind of floating a little trial balloon to see what are market participants going to do if we take this word patience out of our statement. And the answer is I don't know what they're going to do, but there just seems to be an inordinate amount of focus on the Federal Reserve, and I think the general consensus is that the Federal Reserve has managed this recovery brilliantly and blah blah blah, and I think that remains to be seen. I think the jury's still out. They've got $4.5 trillion on their balance sheet. At some point, they're going to have to get rid of, and I don't think they have a plan for that at all. It's easy to buy all that with printed money, put it on your balance sheet. It's a whole other thing to sell it to get it off the balance sheet without cratering the dollar or driving interest rates sky high. So I think the Fed is backed into a little bit of a corner here, and it's going to be interesting to see how they, work their way out of it. You can see I've got some moving averages here on the chart, and you can see this red line is the fast line, and you can see it's clearly rolled over and has crossed these other two slower lines, and so we might pull down into this support area here, or you might get something. Could get something that looks a little bit like, this is the. Hold on, let me zoom in a little bit. Something that looks a little bit like this, where this is the first pullback here, and then you get a little run up like this, and then a pullback like this. That didn't draw very well. Pullback like this, and then the market takes out, breaks through this, this descending trend line here, and probably off to higher highs. So, there's no way to really know whether we're going to come down to this support area or if we're going to just pull back and then take off again. But we are at a pretty critical space. I suspect interest rates are going to rise a little bit and then pull back. The question is, are they going to pull back further to a new low, lower than this low? Or are they going to pull back just a little bit more and then take off to the upside? So we will wait and see what happens with interest rates. But we have drawn a support box down here below this one. You can see it here, off of this low here. And it's quite possible that we visit that area, and that would bring interest rates to about 1.5%. So those that are looking to refinance their home or buy a home, if you need a home, I'm not suggesting you go out and buy a home, but if you need a home and you want to buy one, you might get another chance to buy them at ultra low rates. Of course, it's still possible that we could take out this low and get lower rates still, but there's a lot of feeling that with the Fed, the Fed activity kind of drove these rates down to this level, And now that they're through buying in the QE program, there's a pretty strong feeling between participants that this is the low. Unless the Fed fires up bond buying again, this is the low. Now, what could happen is they could start trying to raise rates, and then this takes off, and then they start bond buying again, and we pull back. But there's a lot of feeling that in the market that this is probably the low, and interest rates are going to bounce from here. I've said this before, but I'll say it again. The Fed does not set the rate in this market. This market right here is set by buying and selling of 10-year Treasury notes. The Fed sets the overnight rate, the short-term rate in the market. Now, they have been manipulating this 10-year note rate because they've been buying bonds, and typically the Fed doesn't buy bonds with printed money. That's kind of a new thing. They've limited inflation creation to basically the interest rate, the overnight rate, lowering the overnight rate to where banks are more willing to borrow. In other words, what they do is they control the spread that the bank can make on profit. And as the banks can make more profit, they loan more, and then there's money creation out of that process because of the fractional banking system. And that's generally where the Fed has limited its money creation activity to. This QE stuff is a whole nother deal that the Fed has gotten into, and it really remains to be seen on how the Fed is going to get out of it. So now, the dollar, since we're talking about that, let's go to the dollar. The dollar really hasn't suffered under this program like the euro has, but keep in mind that the dollar is the world reserve currency, which means that other countries around the world need dollars to buy, to equal their balance, their trade imbalance with trading partners. And this is very different than what the United States has to do. Last month, for example, we had a $41 billion deficit, trade deficit. Well, we don't have to go buy dollars to offset that deficit. We just essentially we print money and send it to people. So we export our inflation around the world. Europe does not have the ability to do that. So their QE program has resulted in trashing the euro, lowering the value of the euro. Whereas the dollar didn't have that same, the Fed activity didn't have the same effect on the dollar. So anyway, I hope you followed that. It was a little bit complicated, but and maybe we need to talk about that and spend a whole 30 minutes talking about that so people can fully understand it. Because most people do not understand the Federal Reserve, what they do or how they do it. It's just a big mystery for most Americans. And there are probably people outside the United States that understand the Federal Reserve better than most Americans. So anyway, it remains to be seen if we're going to pull down and get to this decision point, or if we're just going to pull down a little bit more and then take off to new highs. So we'll wait and see what happens there. Since we've been talking about the euro, let's look at the euro. The euro is really has just been demolished. Now you can see I had this line here at 105 roughly, and we just about went down there and touched it. I think we did touch it. And it looks like the euro is trying to bounce here. And I suspect it'll probably make a couple of attempts. It'll probably usually, and I'll show you this in other charts, but usually what happens is the first attempt to make a higher high kind of does that just like it did, and then the market pulls back, but it ends up making a higher low, and then it does something like that, maybe goes to there. So we could see that happen, or we could see the euro just blast right through. Where's my Z button? Could see the euro just blast right through this area and make a lower low. So, but the key is always, are we making a higher high or a lower high, or higher low. So when you see the market turn, you want to really pay attention when you start getting to these large pivots. This right here is called a pivot. So from here to here is a pivot. This little area right here is called a pivot. And this right here would be a pivot if the market turned and went the other way. So we really want to focus in on those pivots and try to see, is the market breaking through the previous pivot, or is it stopping short and turning the other direction? Okay, that is the euro. Let's go look at volatility. Volatility remains, crazy. I mean, just the lowness of volatility is just incredible, really. But we had an excursion here below the trend line. We had one here. I've got them marked with these little arrows. We had one here, and this is right on the trend line. I'm assuming you can see that right there. The market, I mean, it literally stopped this week right on the trend line. So it opened here. The bulls ran it all, or it opened here. It ran down. Okay, the bulls drove it all the way up here. It was slightly higher high. The bears came in and drove it down to the trend line. So, it's kind of at a critical place. We'll just wait and see. I mean, but so far we've gotten 3 weeks that have closed below our trend line, and then one closed right at it. So we got a little momentum shift. It looks like it's turning here. So maybe volatility, we get a volatility expansion next week as the market continues to pull back, and maybe that's what ends up happening. If we look at the global Dow, I drew a triangle in on the global Dow. For some reason, I can't get my charts to update like they're supposed to. Well, that's interesting. Let's try it like this. There we go. There's the global Dow. So you can see this is kind of an example of what I was talking about. See, it came up, made a high, pulled back, and then did it again, and then started to go. So double, triple bottom kind of thing. You can see here we've got some consolidation going, and unfortunately you can never tell what's going to happen on these. You can't tell if this is going to come to the trend line. You just have to wait until it breaks out of one side or the other. But obviously the options are it could come here and then bounce, maybe bounce out and go this way, or it could come here, bounce up a little bit, and then break out and go to this support area. So it's impossible to say, but the global Dow is, at least we can say, is consolidating and no longer trending. It's very much in a sideways pattern here. You can see kind of around right in through here, it's in a sideways pattern. So really, until it gets out of this pattern, there's not much to say about the global Dow, although it does seem to me that the market is getting very tired here and wants to do something. I mean, it's tired and took a rest. It either wants to break out and go higher or wants to break out and go lower. So those are the options. Let's look at the UK. So let me do it this way. The UK broke out of this channel. I've got it marked here by these 2 blue lines. And you can see I've got some Fibonacci numbers on here. So we had a swing down, and we've had as much as a 50% retracement. But we didn't get to this resistance box. So, are we going to get to it? I don't know. Maybe it rolls over here and goes lower. Maybe next week we bounce up and start heading our way to this resistance box. But to me, the UK looks very weak here. I mean, it's broken out of its channel, broken pretty decisively. It's rallied back up, but really hasn't been able to get back into the channel. So that tells me, unlike, if you go look at the S&P 500, remember we had our rising wedge. the line used to kind of go up through here. Forget about all this right here. We were looking at kind of this area here. Whoops, this area going back this way. So, you had your rising wedge, and it came up here, and it broke out. It broke to the downside. But then it went even lower, and then look, it turned right back up and got back inside the wedge. So I think I shared with you at the time that I had never seen a wedge that large, so I wasn't really sure what was going to happen. You're never really sure anyway about what's going to happen. There's no way to be sure. So let's look at Germany. Germany still looks fairly strong. We've been watching this trend line. It's been staying above it. I would say it's likely that Germany is going to visit this area. It could roll over here and go lower, but you've heard me say many times, once the trend is in place, the probability is that the trend will stay in place. So I would not look for Germany to roll over here and go this way, but that doesn't mean it can't happen. In fact, if Germany were to go below, if next week we come back to this program, and let's say the candle looks like this, okay, and here's the close right here. If this is the close, then I would tell you that Germany's probably going to break out of this rising trend line and probably go down to a low below this low here. So again, we'll have to wait and see what's happening. But the fast line here, it never really went through the slowest line that I've got here in black. It curled up and started to head up and has gone back through the intermediate line and is on its way up. So, to me, Germany's likely to bounce here and probably make new highs up in this area somewhere. So I wouldn't look to short Germany just yet if that's something you're planning on doing. Japan, we talked about how Japan had broken out of this consolidation range, and the likely target would be somewhere up in this area around 1350, 1375. Japan is pulling back a little bit. It might pull back for a week or two or even 3 and then resume the trend. But generally speaking, this to me looks like a successful breakout. Sometimes what will happen is you'll get a stock that will break out of a pattern like this. It broke out here, and it might continue up, well, like right here. It could have done this and then fallen back in here, maybe even like this, and then done that. So that's not uncommon for us. It's called a fake out, where you get a breakout and then a pullback, but the pullback goes into, and once it gets back in here, the people in the market pile on it and get back to trading it, to the other side of the channel. So Japan is in a breakout mode, and I would say it's going higher. The UK, we've already talked about the UK. Did we talk about Germany? Yeah, we talked about Germany. All right, let's go look at the US dollar real quick. Here's the US dollar. I had drawn this stuff on here. Really what I'm looking at is this box. But it could have pulled back here. I mean, it could look something like, just like what I just drew there. Whoops, let me get this centered correctly. So it could look, like this is the first leg of the pullback. This is the bounce. This is a bounce. Didn't do it right. And then you got something that looks like this. And it pulls back to here. So I drew that really poorly. But I guess all these things are just a little too close together, these bars. So let me try it one more time. You can kind of see, an A, B, C kind of thing going on here, where this is the last A, B, C. Okay, so we're looking for that to pull back into this box. Could it make a higher low here and take off from here? Yeah, it could. But it looks like this is more of a pullback that's kind of choppy and not sideways, but just overlapping, where the bars continue to overlap one another. That's usually the sign of a market that is correcting the main trend. So let's look at gold. Unfortunately, I said that I was going to buy gold here for the room for the YouTube channel. The problem is I was hoping that here we are hoping again. I was hoping that gold would do like one of these and pull back into this 11. I was actually looking for it to even pull back further. I was looking for it to pull back kind of in this 1150 area, and then head pretty strong to the upside, something like that. And there's two things that happened, and I'm making an excuse, so I apologize up front. One is I had to fly to Midland on Monday, so Monday was a fairly strong day, and then I thought, well, I'll put in an order for Tuesday, and that didn't get filled. I'll show you the order I put in. I did decide to buy I did decide to buy an option, so you can see it here. And if you look up here, got that line on my screen. If you can look up here, it shows that. Let me show you what the order looks like. What it's saying is I want to buy at the market when gold is at or below 112.48. Okay. Now this is GLD. This is not the actual gold. So GLD, we'll pull up GLD and look real quick. GLD. GLD is an ETF, and so I was looking to happen here is I was looking for gold to pull back a little bit. I felt like it was going to go higher, but I didn't think it was going to go much higher, so I was looking for it to pull back into this area and then have it resume the trend to the upside, like this. So it didn't pull back until later in the week, and even then it didn't pull back far enough. So I'll look at it again next week. Still try to buy it. My idea was just to buy it for the room and kind of show you. Really, what I wanted to do is I had mentioned that I thought this was a good entry above this location here. Anytime you get, you can see that all these are lows and nothing ever got higher than that until this week right here. And I was mentioning that was a good entry. And if you're on top of it, you can buy. You can buy right there before the week's over. The risk is it pulls back and then goes lower still. But sometimes it's good to wait for the week to be over. But I just really wanted to kind of keep us engaged in gold because I thought this was a good entry. But I will try to enter it again next week. You don't want to chase the market, if it's running away from you, because you want to keep your risk. We talked about this last week, but the risk is for us is between here and here, okay? And the reward is between here and up here. So that's what I want to do, is try to keep the reward to risk in check there and don't get that out of balance. Let's look at the DAX. The DAX is starting to pull back a little bit, although this is a good example of what I was just talking about. If you were shorting the DAX, and this is your high, right? This is your high week right here. Then you would short the DAX when it closed below that, but you can see it traded below that, but then the bulls ran it back up, so it didn't actually close below that. So if you were trading intra-week, in other words, let's say that on Wednesday it broke this low and traded all the way down here, let's say on Wednesday, and then at the end of the day, Wednesday started to come back up, maybe stopped still below that low, but then Thursday and Friday made its way all the way back up to right there. So, in other words, this is just a pullback in a trend that is continuing to the upside. So this would be a bad entry if you were shorting the DAX, okay? And that's what I wanted to try to stay engaged with on GLD, because I think that's a good learning example. Now we've got oil here. Oil is, it looked like, I guess it was this thing in Yemen caused it to kind of get up here, and people were getting excited and so on and so forth. And maybe this is the beginning of something, because we did make a lower low here. I mean, this low is right there, and this low is lower. So it could be that this little downtrend is over, and we did get a close above this the low of this week. So, but we could get oil. Oil could pull back, even a little further, like so, and then like that. So we'll look for oil to pull back early next week, and then I would look for oil to start moving out to the upside. And we've been looking, at this $70 to $75 area. It could go higher than that, but I would look for that area first, and then probably exercise a little caution. So I think that's it for the week, everybody. I mean, there's always something more we can look at. There's the euro. This is on a monthly chart, and you can see that the euro had a sell signal here way back in what month? What is this? This is I don't know, July, I guess, 2014. And you can see the trade program. Well, it picked up a trade here that entered, was a loser, and then it picked up a trade here that never, it entered, but entered here. So really the trade started from here. I think these highs are the same, or close to it. But let's just see what the money would have been on this trade here. It's showing the minimum target 3.8 to 1 reward to risk. So your risk is here, your reward is the distance between the takeout point and the target. So that's a pretty good, you can see here for the size of the account that I've got listed here, that risk is exceeded. But you can also see the euro is still showing a lot of weakness on a monthly basis here. So we might get a slight bounce, and then we might see the euro go all the way down into this area here. So, the euro is just, the people in Germany are just getting poorer every week. I mean, the government's just really, they've ramped up the stealing from the citizens over there. So it's a pretty bad situation. All right, everybody. Well, that is really it for the week. I'll leave you with the interest rate chart. And until next week, happy investing. Hope everybody's doing well. Want to say, we got some European folks here in our room. I want to say that, our hearts and prayers go out to the families of the people that were lost on that jet. That was awful. It just kind of just shows you how much trust you have to have just to kind of wake up every day and live life in our modern world. There's just so many things that we do that, many of you probably heard that driving is the most risky thing you do every day. And really there's just things everywhere that we do that require us to trust our fellow human beings, and why somebody would want to take their own life and then take 150 people with them is beyond me. But you never know what's going on in people's heads, so there you have it. All right, everybody, until next week, thanks for coming in. Good luck to everybody. Be safe. Take care.